an Asian-focused regional gaming company. We've been operating casinos in Asia since 2003 when we formed the company. I'm a co-founder. Originally, we were partnering with casinos, providing services, management services, and gaming assets. And we've come through now the last 12 years to where we are focusing on developing our own resorts. So we're using all of that past experience to execute a singular plan, which is to address the Indian gaming market. Our executive team and casino operations staff have been working in the industry for 20 to 30 years across the world, again the focus now being in Asia. We've set up a series of casinos, most recently in Kathmandu in Nepal, which sets us up very well to execute and to plan our 5-year strategy, which is to build a series of hotel casino resorts for the Indian middle class. So Tiger Palace is our first in a series of resorts along that border. The first casino opens in Q1 of 2017. The first phase is 100 rooms, 53 tables, 250 slots, and the second phase, or phase 1B, adds an additional 300 rooms. So all in all, after the first year post-opening, we expect to be operating a 400-room, 53-table, 250-slot casino resort. So the deal is fully underwritten by CLSA, who's the lead banker. So they've underwritten 25 million Australian dollars of equity. The deal is supported by local broker Baillieu Holst, who is a co-lead manager. And we've already, prior to launching the retail tranche, we've already had very, very strong interest from institutions in Europe, in Asia, and here in Australia.
So Silver Heritage as a group have been looking at Asia and looking for opportunities for a number of years. And when we first came across Nepal, we recognized what a wonderful opportunity this would be to attack and grow into a market that has not been served properly by casino operators. We know that other operators have looked at it. James Packer in particular looked at spending $500 million in Sri Lanka, aimed squarely at the Indian market. Another group, Genting, these are behemoths of the industry. So we knew then that we were looking at a great opportunity, unheard of really since Macau. And this is because in India there aren't casinos per se. There's 1 or 2 riverboats way to the south of where we are. The market that we're addressing in the north of India has 430 million Indians living really within a day's drive of the Nepali border. It's worth saying that that border between India and Nepal is completely porous, completely free for Indians to cross it without passports, and they do so in big numbers, 24/7. Our casino is just 7 kilometers from that border, and obviously in Nepal it is legal and licensable to have a casino. We're the first people to do that, and we'll be the first group for a number of years. We've been running a casino in Kathmandu now for almost 2 years, which has taught us about the regulations, the tax regime, the cost structures and so forth. And what we've found out is the tax rate is approximately $400,000 US per annum, is a flat tax rate that our employees, we overpay our employees, at least give them competitive packages, and the cost base is extremely low for staff. What this means is that we get great returns on our investment. When you don't have a big gaming tax and you don't have a lot of labor costs, then returns are going to be there. So really the challenge is all about marketing. Do Indians gamble? We know from our Kathmandu casino, the Millionaires Club, that they do gamble. They love to play roulette, as opposed to baccarat, which is more popular in the rest of Asia. Roulette has a better hold, and commissions that you pay to players are not based on whether you win or lose. They're only based on whether you lose.
So the key tenets really for us operating in a frontier market or an emerging market really is compliance and governance. So there are a myriad opportunities for operators such as ourselves. Listing here in Australia, obviously we understand that compliance and governance is key. So the major tenet that we have is to assume we're working in a first world market and bring those qualities to these emerging markets. So we hold ourselves as very, very high in that regard. In terms of the unique selling point that we have, we're one of the only groups that's been operating in this market for the last 12 to 15 years. We're certainly first mover on the Indian border. Tiger Palace Resort will be the first hotel casino resort built for the Indian market. So the 5-year strategy for SHG is to continue to build out along that border. So we have plans in place for at least 2. There may be more in the future, but I would see the company 5 years from now having multiple ownership of multiple casino resorts in different jurisdictions. Australia is a very suitable market for us for our listing and again for future capital raises. There are various gaming companies here in Australia that are very well known, that are highly regarded, such as Crown, Tats, and others. So again, for us, it was a very, very good choice for us to align ourselves from an investment perspective here in Australia. So the board itself is led by a man called David Green, who's a casino regulator or an advisor to casino environments. Together with him is a chap called Michael Anderson, who's on the board of Fairfax Media and also on the board of O-Media, and is the non-executive chair. The third independent non-executive director is Richard Barker, who's a corporate finance banker. So those 3 again make up a great board in terms of independence to guide the senior management. From a casino management perspective, our entire team is led by a guy called Paul Simmons, who's worked in South Africa, in London, for listed and unlisted companies. Most recently, he was working at Burswood, at Galaxy in Macau, and was the general manager of Naga Casino in Cambodia, which is a Hong Kong listed casino. So underneath him, he has a broad range of local and expatriate casino officers, all of whom again have worked in both unlisted and listed environments. So we believe we're very, very well set up to take advantage of the opportunities that we have. So we have a 25 million Australian dollar equity raise. In addition to that, we have $27 million of a bond issued out of Hong Kong. So cumulatively, that 52 million sets us up extremely well, not only to complete the execution of the build of the first resort, but also we're acquiring land at the second site, which is further along the eastern border as part of this 5-year strategy. We're also paying down an old bond to simplify and improve the capital structure within the business. We have $6 million of working capital post-opening, which is plenty in our mind, and the balance again is used to fund other small operations that we have.